All right, welcome back. You're watching Metropole Business Center. This is Tech Tuesday, where we talk matters technology, and you can get talking to us on our Facebook page and YouTube at Metropole TV Kenya, and me, Tabitha Muthoni G on Twitter, and Tabitha Muthoni Gabriela on Facebook. All right, now joining me is Kwanwi Tower, Global Head of Global Services from SocoWatch. Good morning, Tower, because you're joining us from Rwanda. Good morning. Good morning.
Good morning, Tabitha. Thank you.
Okay, great to have you. All right, so let's move on. And next, we feature SocoWatch, a solutions-based e-commerce platform using innovative tech to improve the inefficiencies in the supply chain. And we will see how they are helping small-scale shops or dukas in accessing credit and how they are revolutionizing this access across East Africa. And this is where we are joined by Tower, all the way from Rwanda. Great to have you, Tower. So I'll begin with why you chose the East African market in the first place.
Sure, happy to speak on that. And first of all, I just want to thank you for giving me this opportunity to be on your show. Why we chose East Africa was, one, if you look especially at Kenya, Kenya was our home market, Nairobi especially. And if you look at the demographic trends, particularly when it comes to technology, so you look at the rate of internet penetration, you look at the rate of smartphone penetration, you look at the rate of adoption of mobile money, the market was ripe for the solution that we were looking to bring, right? And we needed a market that made sense, and East Africa made sense, particularly Kenya, which was our home market. And so that's why we started in East Africa as our core market, just because of those demographic and internet specific trends that I mentioned there.
Okay, so besides Kenya and Rwanda, what other East African countries are you in?
Sure. So we are also in Tanzania and Uganda, but our move to Tanzania and Uganda was driven, one, in part by the proximity of those countries to Kenya, but two, because of the relationships that we had with existing FMCG manufacturers in Kenya that we were able to carry over to these new markets as well.
Great. Now, Tower is a solutions-based e-commerce platform. What technology are you using to achieve this, and how does it work? And really, how does it differ when it comes to the East African countries that you are in at the moment? Kwanu.
Sure. I think the best way to really kind of contextualize our technology and our solution is looking at the ecosystem before we came in and the ecosystem after we came to market. So the ecosystem before we came to market, if you were an informal retailer, also known as a duka, you would have to typically leave your shop and travel a couple kilometers to a wholesaler to be able to actually physically buy the products you need, and then you would actually have to organize transportation back to your ecosystem, back to your shop. So if you think about what we've been able to do, we've now allowed these merchants to use our application, which, one, allows them to know exactly what we have in stock, as well as have very clear price transparency. And so at a click of a button, our merchants are able to see exactly what we have in stock and be able to know our pricing immediately, right? And so once they make that purchase, what happens is that purchase then goes through our ERP system. An ERP system is basically a system used to manage goods, right? So we're able to then track those orders, very similar to how I'm sure your users have used Uber, right? So when you make a request on Uber, Uber then transfers your request to a driver who comes to pick you. So similarly to that, when a merchant makes a request for products, that request is then transited to one of our warehouses, where the goods are then dispatched to a rider, and the rider is also using our technology, which they then dispatch the goods to your shop. And when they make delivery to your shop, all of those transaction points are captured in our technology. So our technology actually helps manage that end-to-end system from order all the way to delivery. In addition, what we've also been able to add on to our technology, which has been a huge value add for our customers, is we've also been able to start to introduce lending, right? So our customers can now access working capital loans through our platform, which then enables them to be able to grow their business. So our technology has really kind of been the backbone that has allowed our ecosystem to be able to thrive and to drive efficiency for us as well as our customers.
And how easy or hard is it for them to access, yes, to access Duka owners through your app? How is it easy or hard for you
Sure.
to,
So
yes.
I think, yeah, so I think, look, I think if we segment the market into two different parts, you have Duka owners who have a very young profile, they have smartphones, those guys are a bit more tech savvy. And so I think that segment of the market, adoption has been a lot easier. But if you think about the typical profile of a Duka owner, on average, a typical Duka owner is between the age of 35 to 55, right? And as a result, a lot of them, one, are not the most tech savvy. Two, not all of them have smartphones, or even when they do have smartphones, they have limitations with their smartphone, whether it be the space capacity and so on and so forth. And so I think part of what we've been looking to do with our solution is we do not limit ability for these Dukas to access our ecosystem only through the app, because we understand that app adoption is not an easy thing for these Dukas. And so as a result, we allow the Dukas to use our call center so they can call in and place their orders through that, as well as they're allowed to SMS us and place their orders via SMS. And so we offer multiple channels that allow Dukas who can't access us through our app to be able to continue to access our services. But we do also offer training, as well as a program that we had launched was our smartphone financing program, where we were actually also financing smartphones for these Dukas to be able to now start to experience the convenience and the efficiency of using an application to manage that process.
Yeah, and no, you've mentioned something about being tech savvy. You know, for those old people, they have Dukas, they have their own small scale shops. How do you go about sensitizing or training them on how to use the app?
No, that's a very, very good question. I think that's where the role of our field sales agents comes in, right? We spend a lot of time internally training and equipping our field sales agents to be educators of our customers, right? And so our salespeople, we like to think of them not only as salespeople where they're transacting with our customers, but we like to think of them as almost like business consultants who work hand in hand with our customers to train them on our systems and train them on our products, which allows them to then better be able to grow in our ecosystem. So even when it comes to financial services, for example, right, our people are trained to be able to train these customers on basic financial literacy. So when they're using our loan products, they're able to use our loan products in an effective way that can allow them to grow their business versus harming their business.
Great. Now, when it comes to having these Duka owners on board on your app and also working with them, what criteria do you use for you to know, verify that this is a legit Duka owner? Yes, you have gone on ground, you have known this is where their business is, but what sort of background checks do you do first for you to verify or have someone on board on your platform?
Sure. So I think there's the way that we run our process. There's different checks depending on what services you're accessing, right? So if you're accessing our delivery service, right, the bar in terms of delivery is a bit lower in terms of what we require for Duka to access us. Just because if you think about the relationships that they have with other traditional distributors and wholesalers, right, that relationship is very informal and casual. And what we want to do is we want to be able to meet the customer where they are and then carry them along in the journey. And so we want to limit the number of friction points at that early stage. As you move into our ecosystem and as you grow with us and as you want to migrate from, say, a cash customer to being a credit customer, then the bar is a bit higher in terms of what we require, in terms of background checks, in terms of being able to get your ID, in terms of being able to access your business license, and so on and so forth. And so I think the bar in terms of KYC is higher depending on what services you're looking to access. But I think what we try to do and what we focus on, as I said, is we try to meet the customer where they are, and we then try to carry them along in that journey. And so we try to minimize and reduce the amount of friction points that we put into that journey, while also making sure that we don't expose ourselves to too much risk.
Great. So I will add these on to that. Maybe you can talk about your lending practices, protecting the livelihoods of the customers, and what happens if someone defaults payment.
Sure. I think we are very, very focused on what we like to call sustainable lending, because one of the things that we pride ourselves internally on is that when our customers grow, we grow. Right. And so when we think about lending, we don't think about lending as a one-time transaction to our customers. We think about it as a continuous journey in which we are building with our customers. And so as a result, we're very mindful about the different cycles in which our customers move in their business. And we try to make sure that we maintain constant communication with our customers. So once we give you a loan, we don't just sit back and say, hey, we're going to let you take your time to pay. We make sure that we've built into our system reminders, we've built into our system checkpoints that allow us to make sure that we are continuously engaging with you to make sure that you remain on track with your loan. So that's step one, because we like to say that the best collection is actually driving retention, right? So if we drive customer retention, we drive collection. So that's our first and primary strategy in terms of driving collection and making sure that customers remain robust. As I mentioned earlier as well, another strategy that we utilize is we also focus on financial literacy training, right? And so we're going out of our way and we're investing through our field agents and our sales agents to better equip these Dukas with the knowledge of how to use our financial products in a way that actually helps and benefits and grows their business, right? And so we believe that education and literacy is a great way to empower them to be able to use our products in ways that we may not have imagined that they could use them, right? And so we want to equip them with that ability to make those decisions themselves, right? So we believe education is another critical way to minimize any risk of default. And then lastly, in the case of default, what we typically do is we work very closely with our merchants to basically restructure the loan, right? So things like reporting them to CRB and so on and so forth, we look at those as very kind of last resort measures. The way that we like to approach our customers, because we believe that these customers are the growth engine of our business, is we like to look at one, understanding why did you default? So is it because you've had a drop in sales? Is it because you've had a family emergency? Because as a lot of us know, these Dukas are family businesses, right? So the money that they use to run their business is also the money that they use to take care of their family. And we want to be accommodative and understanding to understand that, hey, you might have had a one-time event that has impacted your finances. And so how can we restructure the loan terms to allow you to then be able to get back on track? And so so what we found and what has been able to allow us to achieve the world-class rates of repayment that we've been able to achieve is this ability and this flexibility that we've built into our system, where we've built this proximity to our customer, and we've built this open dialogue that allows our customers to be able to come back and engage with us when they have problems repaying their loans.
All right. So, Kwanwe, all this you're talking about is data. You're using technology and data comes in handy. So, when we say you have these Duka owners on board and there's a lot of information going on, when it comes to data privacy, how do you go about protecting your customers' data? Yes, Kwanwe.
Great question. Protecting our customers' data and data privacy, both for our customers as well as all our different stakeholders, is quite important to us. And we actually have a data privacy policy that we've built internally, and that is supported by our security ecosystem that we've built. So one of the core things that we build into our system is before anybody can access any one of our systems, we have a two-factor verification process. And I think that's an industry standard that has been put across the board. So whether that's accessing our customer app, whether it's accessing our web-based apps, whether it's accessing any of our other internal apps, we have a two-factor system that requires that the user who's trying to access the system needs to then go through that verification. And we say that we believe that that's one of the key points of reducing that risk. And then from then on, what we also do is we have a permission-based system internally that then restricts user rights, right? So what a sales agent needs to be able to see in order to do their job, we then very rigorously review that and make sure that we're only giving them the most salient data points that they need to do their job, and we're not overexposing customer data to people who don't need it. And so I would say, first and foremost is access. And then second is permissioning, and we run a very robust permissioning system internally that then ensures that we limit the rights of the type of data that people can access with regards to our customers. And so I think overall our policy is very built around the global standard that is out there for how tech companies do this, and we continue to ascribe to continue to lift the standard and adhere to those global standards.
Great. Now, you work mostly with the informal sector, Kwanwe. So what kind of turnover do you foresee for SocoWatch as well as the informal traders in the next 10 years?
Sure. I think, look, if you take, the way we like to think about our business is we like to think about SocoWatch as a company that aspires to be a Pan-African business, right? And so if you take the African continent at large, right, today, according to Brookings Institute, right, the size of the FMCG or essential goods space is roughly about $850 billion market. If you look at some studies done by McKinsey's expecting that market is going to grow to about 1.2 trillion by 2025. And if you apply that growth rate, we can assume that that market is going to be between $1.5 to $2 trillion by over the next 10 years. And if you take that market of spend, today, roughly about 90% of that spend happens in informal markets, right? And so if you think about the size of the market, right, we really believe that there's a huge market opportunity just because if you look at disposable incomes for a lot of Africans, right, more than 60% of disposable incomes are spent on essential goods. And those essential goods are accessed through informal retailers. And so we really believe that our business model and the market segment that we're focused on is a market segment that's going to continue to grow, and it's going to continue to be a dominant market segment for the continent. And so for us, our aspiration is to continue to capture as much market share as we can as we expand across the continent to be a Pan-African business as we've set out to be.
Great, and we'll wrap it on that as you conclude for us and tell us the kind of solutions that you have in place to offer the business industry and also as you seek to traverse other African regions. Yes, Kwanwe.
Yeah, so look, I think in terms of other solutions, right? As I mentioned, we started off with logistics, and logistics and supply chain was the core of the SocoWatch business. Our aspiration is to continue to be a one-stop shop for informal retailers, which is why we've launched financial services, starting with the working capital loans. And so we really think that we have a huge opportunity to be able to partner with our customers as well as other stakeholders who are looking to engage with our customers through our platform to be able to offer a one-stop shop for our customers to get everything they need to be able to run their business. And so we that's our aspiration, and that is what we're looking to build. And with regards to expansion, with COVID, we're very mindful of the different restrictions in different markets when it comes to expansion. But as I said, our aspiration is to be a Pan-African business. And so, we are looking over the next few years to continue to expand to new markets, whether that's in West Africa or whether that's in Southern Africa. But our goal, as we've set out, is to be a Pan-African business. And so that is going to be a core part of our strategy and our focus over the next few years.
Great. I have a question for you before you go. Someone is asking, how do they get to access the app? And is there a guidance on how they can access the services that you offer? I think you explained that, but just briefly, explain that to them. That's Angela. Yes. Yes, Kwanwe?
Sure.
Yeah.
Sure. Sure. Happy to explain that. So today our app is a closed loop system. So if you go on Google Play Store and you download our app, you're not going to be able to register immediately because it requires you engaging with someone from our team to be able to register you. And so today the way that our registration process works is you have to reach out to our team, and then we will then take you through the registration process. And so you can't just download our app and register by yourself. And so engaging with our team, we have multiple offices around Nairobi. We have offices in Mombasa. We have offices in Nakuru, and we have offices in Eldoret. And so if you reach out through our website to our team, we'll be happy to reach back out to you, and we'll be able to then get you set up. We also have social media presence, so you can feel free to reach out to us on Facebook. You can reach out to us on Instagram. You can reach out to us on LinkedIn. And if you reach out to us on any of these platforms, any one of our people will be happy to direct you to the right person who will then be able to onboard you onto our system. But today, unfortunately, the way that we've kept our system, to your point earlier about risk management and making sure that we're able to gather the right information as part of the KYC process, we've restricted that registration to it being done by someone on our team on behalf of the customer.
Great. And one more, someone is asking if they are a startup or they are interested in working with SocoWatch, how do they go about it? Can they get help, or what kind of level do they need to be at to work with you? Yes.
Look, I think it depends on where they're looking to engage with us, right? If you're looking to engage with us as a logistics partner, where you're providing logistics services to us, or you're looking to engage with us as a lending partner on the financial services side of our business, right? If you're looking to engage with us with existing products that we have, then absolutely reach out to us. And as I mentioned, we through these different platforms, whether through our website, whether through social media, you can feel free to reach out to us, and we'll have someone from our team reach back out to be able to carry on that engagement. For products that we don't already offer, you can also feel free to reach out to us. But unfortunately, we're still scaling our platform and rolling out new products, and so the speed of engagement really depends on whether or not that is a core focus for us immediately, or it's something that we're looking to roll out in the future. And so we're always happy to engage with other startups. We're always happy to engage with other businesses, whether as customers or as partners. So we're very, very open to engaging with startups who want to work with us.
All right, thank you. I think there we have it all answered. And if you feel your question has not been answered, or if you'd like to know more, you can catch a recap of these at 4 p.m. And also on Facebook and YouTube, where the show or the episode will be uploaded, and you can get to watch, listen in, and ask more questions. And yes, if you have any. All right, thank you so much, Mr. Kwanwe Tawa, Global Head of Revenue at SocoWatch.
Thank you, Sabitha, for your time, and thank you for this opportunity.
All right, great. There you have it. So you can get to work with SocoWatch if you are a duka or a small-scale shop, and you can get to access credit from them and help boost your business and yourself as well. That's it for Metropole Business Center. You can catch a recap of these on our Facebook platform at Metropole TV Kenya, and YouTube, where it will be uploaded at Metropole TV Kenya. My name is Tabitha Muthoni, and that's it for now. Do enjoy the rest of your viewing.